Unlike many other trading instruments, oil showed no reaction to the meeting of the European Central Bank. This is hardly surprising as the energy market is already pressured by the growing energy crisis and the threats of the Western countries to impose a price limit on Russian oil and gas. This is why investors are cautious and prefer to stay in a wait-and-see mode. At the moment, traders need to see how the price cap on Russian crude exports will affect the energy market. Yet, even when the market realizes all the consequences of the new restriction, it may still behave in a weird manner. The impact of this decision is hard to predict. It may either have no effect or may lead to a catastrophic shortage of energy supplies. In the meantime, investors stay cautious and look for more clues. There are other factors to cause a sell-off in the market. Among them is the resumption of COVID-19 lockdowns in some cities in China, one of the largest oil consumers in the world. Besides, crude supply may soon increase as the UK is going to lift the ban on shale gas drilling. Brent oil futures slowed down the pace of decline near the level of $87.30 per barrel. Then the price pulled back to the mark of 90. Despite current fluctuations, the bearish trend prevails in the market. So, after testing the resistance of $90 per barrel, the price may well reverse to the downside. And this will trigger more selling activity on oil so that the price may test a local high. A proper upside correction against the downward movement will be possible only when the quote settles firmly above the level of 90. Meanwhile, gold has once again proved its negative correlation with the US dollar. As the greenback weakened, gold managed to gain some ground, and yet this looks like a short-lived effect for gold. Aggressive interest rate hikes introduced by the ECB will inevitably widen the precious metal due to the higher cost of borrowed funds, and this will push the price down below $1,700 per ounce. The current surge of optimism is only for the short term. However, if the asset manages to consolidate above $1,730 on the 4-hour chart, its upside potential may increase. A fall will be activated as soon as the price breaks below the level of $1,780 per ounce. Along with the oil, the ruble showed no reaction to the rate hike by the European Central Bank. This is natural, as the main factor for the ruble is the policy of the Russian Ministry of Finance and its plans for currency interventions. Apparently, nothing will happen in September, and these measures will be included in the next year's budget plan. Given that the plan should be approved no later than October, foreign exchange interventions may start only late in the autumn. Until then, the ruble will stay incredibly strong. It's sad to trade in the current range in the near future. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.